Hi, it's Danny Valencia here. I'm really excited. This is one of the first Fridays of many that I want to jump on and be sharing with you market updates in Prime London, some of the UK as well, and I'll be also being joined by a special guest today. I'm really excited because I've got Rachel from the Mortgage Advice Bureau, and we'll be asking just a few questions about the mortgage market at the moment, including buy-to-let, the 95% mortgages as well as overseas, and just ask a few questions of how easy it is to get a mortgage and what are the documents that's needed. So, yeah, really excited, and I have Rachel. Hi, Rachel.
Hi, thank you for letting me join today. Really excited to be part of this.
Yeah, absolutely. I mean, you and I, we jump on a call from time to time, and I love our catch ups. I always walk away with a lot of information. Even though I'm in real estate and property, it's always great to get a perspective, especially from a mortgage advisor from you. So, like yourself. So, yeah, really cool to have you on board. Um,
Perfect.
Listen, the market at the moment, obviously, we're now in Q2. I've been reviewing the Q1 market report from Lonres in Prime London. And I guess there's nothing surprising there, especially when you compare it to this time last year. And actually, I'm going to bring it up if you don't mind.
Yeah, go for it.
Let me bring this up if I can. Okay. Yeah, I was looking forward to the report, which for some reason I can't find it here now.
Technology at its best, the world we now live in.
Yeah, it was there just a moment ago, and for some reason, just can't drag it. Your entire no application. Okay, and then okay, let's just jump on a few questions from your perspective. Um,
Sure.
so listen, I want to ask you buy to let, just because I'm going through a buy to let at the moment, and been going through a few rates and also looking at different options. What is happening in the market at the moment when it comes to buy to let? Is there any difference this year, 2021, to around that this time last year?
I would say yes, because obviously this time last year we'd gone straight into full pandemic national lockdown, and lenders had really had to start to pull the braces on a little bit. What we've seen though over the last 6 months, probably, but predominantly this year, is that lenders buy to is such a huge part of the market for us, and lenders want to be part of it. They want to be offering this to landlords, new and existing. And it's been quite exciting to see the market change a little bit as actually wanting to assist landlords coming into the arena, but those that have got large portfolios assisting with them as well. So we've seen more lenders come to the market. But secondly, we've also seen current lenders expand what they're doing with their portfolio landlord offering, increasing the numbers of buy to lets you can have, and also how they're stress testing. So it's really exciting time for landlords.
Fantastic. And so, in terms of loan to value, what's changed there specifically, if anything?
To be honest, nothing much really. Like lenders really still their hotspot is 75% loan to value. If you've got that 25% deposit, you're going to be in the arena for the good rates. There is some lenders that will work with a slightly smaller deposit of just 20%.
Hmm.
But 75% is where you really get the biggest slice of the market of lenders. Obviously, in our world, the bigger the deposit, the lower the rate. It's always going to be that way. And also, it depends if you're buying in your personal name or if you're looking at a limited company and things like that. The loan to value is the same, but the rates slightly change. So sometimes we see limited companies sometimes using slightly larger deposits just to benefit from lower rates.
For sure, for sure. And those landlords have been on fixed rates. What should they be looking at as they come out of that? What opportunities can they see out there?
Definitely. So we always say to our existing landlord clients, we want to be reviewing it at least 3, if not 6 months before that rate ends. We want to understand what's been happening, especially over the last 12 months. Have they had tenants not paying rent? Has there been any issues? Are they looking to expand their portfolio, which a lot of landlords are looking to do at the moment? Do we need to release some more money? But fixed rates for landlords are fantastic. So we're seeing a lot, probably majority of landlords refinancing onto another fixed rate in some cases, they're actually tying for a longer period of time, sometimes a 5-year fixed rate, just to know they know what the payments are going to be. They don't have to worry about restructuring, refinancing, and incurring any cost down the line.
Okay, sure. And how about homeowners then? What's the situation at the moment? Obviously, there's a lot of hype when it comes to the 95% loan to value. Are people going crazy over this? I mean, a lot of people would expect it, right? What's the reality? What's happening?
So 95% is fantastic. It's been back in the market pre-COVID. It come back. It was a small amount of lenders were involved in it. We hadn't really seen it at this huge level since the recession back in 2008. So it's very, very exciting, not just from a client perspective, but actually confidence in the whole market. For lenders and the government to be supporting it just shows there's a lot of confidence in the mortgage and the property market first and foremost. And inquiries are high. A lot of clients are looking at this, especially those that might be going to miss out on the stamp duty. That's coming to the end in June. They're wanting to make sure that they've at least got that stamp duty put aside, so therefore slightly less deposit rather than the 10%. Obviously, the scheme officially launched on the 19th of this month, and it's running through to the 31st of December 2022. So we've got this amazing period of time for clients to take advantage of it. And the lenders that have come about, they're all offering different USPs about it. Some of them are going to a certain lending or property value. Some of them are offering, one lender launched it on Tuesday, and they're actually offering joint bar sole proprietor. So actually, you can actually
They
go
what? Sorry.
They're offering joint bar sole proprietor, which means, for example, you could yourself, Danny, say you're buying the property on your own, you had the 95% option, but maybe the affordability, you knew you could make the monthly affordability, but for the lender's criteria, didn't fit their affordability calculator.
Yeah.
So a member of the family, so a parent, was going to join you on the mortgage, but not be on the deeds. Therefore, there's no stamp duty liability there, but we're able to utilise that parent's income to help with the affordability assessment. And that's at 95%. So it was really fantastic. Metro is the lender who launched it this week. Other lenders are doing fantastic things as well regarding whether you can do the 95% on new build.
Yeah.
We've got it on flats as well as on houses. Different lenders are doing different income multiples. So lenders really want to be involved in this. They don't want just to be a highlight marketing, like media output that we're doing this, but we're not actually going to lend on it. They've actually put some real thought into their criteria to make it actually feasible and possible for clients to access it.
Yeah, it sounds like they're making it as easy, however responsible as well, responsible lending.
Completely.
But it sounds like they're making it as easy as possible. I mean, do you see the property market leading the way in terms of the economy? Is that the government's plan, do you think, in your opinion?
I think that was demonstrated last May when it was the first part of the economic market that was reopened. They reopened it first, foremost, over everything else. The property market is instrumental to our economy, not just from the buying and selling properties, the money that's made from that, but it's everything that's involved. Because when people buy property, they use lots of companies involved in that transaction, from solicitors to removal firms. They then end up decorating, pre-selling, and after buying
appliances. You've got your curries and everything else. IKEA. Yeah.
Completely. So it is instrumental to so many things. And that was demonstrated with it being the first thing open last year. I think it was a huge confidence backing for the property market from the government as well.
Sure. Okay. And what kind of demographic do you actually see are the people who are actually making the most of this? Is it first-time buyers? Is it upsizers? Because of the pandemic, I'm seeing a lot of people moving from one bed to two beds. Who are the biggest winners in this whole situation at the moment, in your opinion?
It really is a mixed bag, because what you've got the first-time buyers that have been able to take advantage of the stamp duty relief. Home movers are also taking advantage of that. But also, I think the way we all live and how we look at what we need has changed drastically, the dynamics. So like you say, go from one bed to two bed, you need that ability to work from home. If you've got a family, the chances are you want the ability to have areas, if you need to do homeschooling again, also to be able to go and hide and work away from the children in peace and quiet. And also the outdoor space. So that's what we've seen. If we've had clients that have maybe been in apartments where they've had no outdoor space themselves, actually, if they're looking at doing that move, they want a small garden, something they can call their own, where they can just get some fresh air and enjoy the lovely weather, which we had last year, that obviously we were all locked indoors for, which was great if you had a garden, but if you didn't, it was very, very hard for everyone. So I think it's a massive mixture of clients that are benefiting it. But what we've probably got is we've got first-time buyers who have probably wanting to buy over the last 2 to 4 years, but have been trying to save up the money for the stamp duty on top of the large deposits that are needed, especially in and around the Prime of London.
Yeah.
Then you've got the home movers that need to take that next stage up, whether it's for school catchment areas or to get the bigger space, the bigger gardens and so on like that. Actually, if you take the stamp duty for in London, £500,000, £15,000 savings, most of our properties are going to be over that value. Why are you not going to take advantage of that? That's what we're seeing.
I for one think it's an amazing time to invest in London, and taking up that opportunity. What's your opinion on that? Let's talk a little bit about the market and where we're at the moment, London specifically, because what I know as an agent is that there are micro markets, and when people talk about averages, or when you see in the media and you see the news, people get very confused. They get a mixed message. Prices are going down, and then they see another thing in the newspaper. Oh, prices actually going up, and it's booming. And then there's all this confusion. And I always let my clients know, and everyone I speak to, there are micro markets. Even within London, there are micro markets. I mean, my God, even in the same postcode, there are micro markets. You can have a postcode, for example, NW3. And there are micro markets within that postcode. So, the best thing to do is really speak to someone who's local and knows the market, because it could be doing different things at different times. But in general, if we picked, and again, it can be quite challenging, but if we picked, let's say, Prime London, and we're going to be reviewing Prime London stats, what do you see is happening in Prime London at the moment, and how do you see that playing out as we move forward into the second quarter to third quarter of 2021?
I think we're going to see it continue to increase. We've seen it already happen in quarter one. Mm-hmm. There's been a massive increase regarding property purchases, properties coming to the market. It shows the confidence in Prime. And that's what people forget, is they kind of always think when we're talking about the market today that maybe London's not actually taking the positive effect from it, because obviously you do have a lot of apartments. It's very different. It's been in tier 4 a lot more. It's been in lockdowns a lot more, and so on, where actually people still want to be there. And as we see things reopening, which they are doing already, if you go into pockets, like you talk about micro markets, then there's pockets of London which are absolutely buzzing at the moment. You go to Chinatown, it's like nothing's ever happened. You go into Soho, it's starting to get the buzz back. You go to the city where I'm based, and it's so eerie still. And that's the thing. But when things reopen...
I was in one in St. Pancras yesterday around the canal. Oh my God, I actually posted it on Instagram. It's like a carnival, It really is, and businesses are making the most of it. And again, they just need to be responsible about it. And really I think, for the most part, people are. People are being responsible.
Definitely, we've seen people are definitely taking responsibility, and they are following the rules, which is so important. We don't have any more lockdowns. But people will be returning to work, even if they're only going back into the office 2-3 times a week. They don't want that commute. If you're working in the city, you're working a good 11, 13-hour day. You don't then want an hour and a half commute either side of that. And that's what everyone forgets, is that's still going to be there. We've been doing lots of research on London Prime lately regarding when we see things reopen, how much of an impact that's going to have on the property market. And it's going to be really positive, because actually a lot of the reason that it's maybe not increasing some of the other areas is because people have actually moved out of London. We've got lots of clients that are based working in London. They're usually living in London, but because of the pandemic, they moved back outside of London to their family homes, maybe just to actually be close to family rather than house sharing or renting on their own and being very isolated. And we're starting to see these people coming back, and they want to buy, in London because they still want that same lifestyle. Even if we don't see things reopen fully till June the 21st, and even if we see a couple of back steps with the pandemic, they still want that lifestyle. There's a reason that you live in Prime London. It's more of a lifestyle choice than anything.
And a lot of the areas that we cover as well, a lot of students, sort of, you got your Bloomsbury area, Fitzrovia area, and central London. And you can already see, I mean, universities, my understanding is they're not even open. And yet you can already see so many students with their suitcases coming in. And it just goes to show a lot of these students, perhaps, from abroad or from other parts of the UK, probably just sick and tired of being at home with their parents. And even though the universities ain't open, they're coming back in so they can enjoy everything that London has to offer, because, we are still beginning to open up. I know you need to jump off in around about a couple of minutes. I'm going to try and show this here, which is the Lonres update as to Q121. And I just find it's a lot of information here in terms of in comparison. So obviously it wouldn't be fair comparing this Q1 to 2020, because we were pretty much in lockdown on the Q2 going into Q2, but it does compare it to kind of the last 4 or 5 year average, and it does show that the amount of sales that have been closed over the course of the first quarter has been substantial, even compared over the course of the 4 year 5 year average. When it comes comparing it to 2016, not so much. 2016 is still one of the highest, and that's for the obvious reasons if you're in the property industry. When it came to the stamp duties, and I believe if I'm not mistaken, it was the capital gain tax as well. But that's really interesting. I mean, you've got some really wonderful stats here, which I'll probably show, I'll make sure I'll show it in the actual YouTube and the live itself. In terms of the prime side of things, where do you see that going, especially now that you've got the 2%? And I know that you need to jump off, but I'm gonna have to do this as a 2-part series, because I wanted to talk about the overseas buyers as well, and the mortgage and everything else that they can offer. So yeah, how do you see the prime London? So we can wrap this up for today. Where do you see the prime London, the actual kind of above 2 million, 3 million, 5 million?
I think we're going to see this property market moving, and it might not be till maybe Q3 this year, when things are reopened fully, that we really start to see the figures improving. And I dispute. I'd say look at 2020's figures for Q1, not Q2, purely for the fact that actually we came into Q1 of last year. Everybody in our industry, in your industry, was on a huge high. Brexit was behind us, elections were behind us. We were going into what was going to be our best year as an industries. And it was as we came to the end of Q1, in March, that things started to slow down because of the pandemic. But actually, it was a really strong year last year. 2019, if you take that as an example, we've already seen massive increases from there already. And I think that's going to continue. That trend's going to continue. When you're looking at the properties that we're talking about, the 2, 3, 5 million, they give that space. So if you've got clients that, very rarely do you find clients jump from, say, 900,000 to 2 million in London. They go outside of London. But the clients that do those jumps within, it's for a purpose. They want that different area. They need the school catchment area. They need the space. None of those things have changed. Space is still more important than ever. School catchment area, and not having to commute so much, because how many times have we all seen it when we're on the tube going into and out of work, or the kids on the tubes as well going to schools, where actually a lot of parents are saying, actually, I want to be closer to the schools, I want to be in walking distance. Well, the closer you are to that school, the more expensive it's going to be. But actually, for longevity, that's more important to a lot of parents as well. So actually, I think when we get into Q3, Q2, obviously the figures this year will be much better than last year. But when we're looking at 2016s, I think as we go through this year, you're going to see some more comparable figures to that. And we will touch on it next time we speak regarding the overseas, but that's impacting as well. We're already seeing the overseas clients back in the market wanting to buy, and they buy at that level.
Yeah. I've got a lot to share with overseas, and I'm excited to book in another session with you to catch up on that. But I think prime London, as always, is very resilient. We saw it over Brexit. Yes, there was an effect on it, as we expected, but it's been very, very resilient. So it will be great to catch up again. Listen,
definitely.
Great to have you on, especially as this is my very first one. We had a few technical issues. We got there in the end. It just means that it's shorter than what we expected. And I'm quite excited about my new little mic here.
So. It's amazing. I'm jealous of it already.
Well, you have enough time to get one for the next time round, okay?
Okay. You're setting me a shopping list already.
Yeah, absolutely. Listen, wonderful to see you. Have an amazing weekend. And we'll catch up soon, okay?
Speak
So,
soon. Thank you for letting me join.
Rachel, just before you let you go, if someone wanted to reach out to you, what's the best way for them to reach out to you?
So they can either go to our website and I will get this details shared onto this. If not, they can reach me on emails, probably the best way, Rachel.Geddes, as per my name, at mab.org.uk. And we're here to answer any questions, or they can come straight to you, Danny, and you can refer them over.
Amazing. Thank you so much. Cheers, Rachel. And thank you for
Take
anyone who
care.
joined. Cheers. Bye-bye.
Thank you.
Bye.
Bye.